see, you can share it with your friends. All right, let's start off with. I'm hoping that this works. Oh, you know what? That doesn't really work, does it? When the screen is over like that. Okay, let me. I'm just going to go like this real quick. There we go. All right. There we go. Now the screen's showing up nicely. All right, we're going to start things off with silver. Look at that. Creating new highs yet again. It's interesting. Over the last week, I have had a very large influx of people talking about buying silver. Very, very encouraging to see. I think that we're only just beginning to see the long-term effects of terrible policies, terrible financial policies. And if we go out to the daily chart, we can see the classic hockey stick already starting to form. How much further will it go? We don't really know. But what I'm watching for is the ratio between gold and silver. In fact, I have stopped paying attention to what the value of things are in accordance to dollars for quite a few years because it doesn't really matter anymore. It's just monopoly money. Since gold and silver are where it's at, we need to look at how we have witnessed this kind of time in the past. And we can see that over here, this was March of 2020. It was 126 ounces of silver to get 1 ounce of gold. So while gold has done incredible things, it has also depreciated against silver by 62%. Simply meaning it is far cheaper to get gold today with silver than it was in 2020. It's an interesting way to look at it, isn't it? It's because while gold is also rising, silver is simply rising at such a higher pace, such a much more rapid rate. And Ian, can you give people an idea of how you understand that to be? Why is it that we're experiencing this right now? So that I don't want to be just the one repeating myself all the time.
The silver or the
Yeah.
ratio?
Why is it that gold and silver they are fluctuating at different rates?
Well, I think
Like
a
for
lot of it,
instance, how silver is rising at it's growing faster than gold.
I think that, well, my observation is that the attention in the marketplace has been mostly on silver rather than gold. What with everything pertaining to electric vehicles and solar and all that kind of stuff. Uh,
Hmm.
and not so much on gold, you know. There's been a readjustment towards gold, toward things like data and Bitcoin. But silver tends to be more the poor man's gold,
Hmm.
and so a lot more people tend to focus on that. I'm not sure if that's what you were looking for, or if you
Oh, that's
were
great.
thinking of something based on our previous conversations that we've had, which I
Oh,
can't
no,
remember.
no. This is great. That's exactly what I wanted. Your perspective on it. Audrey, how about you? Do you have what's your perspective on this, gold versus silver? A lot of people are asking that now. I want to get silver, but should I get gold? And what from what you've learned over the, past year and a half or so that we've been doing market analysis on the regular, what have you learned about gold and silver and how they fluctuate?
You mean
And
me?
oh yeah, there she is. Yeah.
A bit confused about it, actually, as to why um, those two compete against each other almost, right? Like, I mean, one goes up, the other goes down, the other one goes up, the other one goes down, or they go together. And I'm like, why are they doing that? Like, is it manipulation? You know? So I think I'm still a little confused about, and I did mention this, was it a month ago? That I'm like, I can't get my head wrapped around it.
Right.
So
Yeah, yeah.
maybe a few other people out there are having the same issue, right? And I'm like, yeah, I'm kicking myself. Like, why didn't I buy silver a long time ago, right? Or gold?
Right.
Like when I did all the investments with, all the cryptos and stuff, why didn't I put it in gold and silver instead? You know what I mean? Kind of thing. So that's kind of
Yep.
my take on it. So maybe other people are feeling the same.
Thank you. That's great. Everybody is going to get something different throughout this time. So thank you. And there's no wrong answer. What I'll share with you a little bit of what I know regarding the ratio, and that is that typically speaking, the ratio should be hovering around 15 ounces of silver for every ounce of gold. And so what we're noticing right now is almost like an unraveling of silver, where it's correcting itself. We've been so accustomed for years. Let's go to the weekly chart. The last time it was 45 ounces of silver to buy an ounce of gold was 2011. That's when we were still recovering from the last financial crisis. So this whiplash that we're experiencing right now is really more of a correction than anything. What we've noticed, like what you were talking about, Audrey, was just that manipulation. Because the reason why silver ought to be around 15, 1/15th, I've been saying about 1/12th even. The reason why is because there's approximately 12 times more silver to 15 times more silver, depending on the season. There's 12 to 15 times more silver brought out of the ground and refined than gold. So the amount of silver and gold on the market usually would be accurate in letting us know what the value was. But that's not how it's working at all, because all of this was done, the gold prices, everything, even in here, in early 2000s, that there was just the preparation time. It was all through here. Companies like Oracle, in the 90s, late 90s, early 2000s, Oracle, the one of the largest providers for data centers, they build data centers. That's their job. That's when they got started. And so gold and silver went up during that time, long before the crash. There was the 2008 collapse is right here, that little blip. All of it was built because the tech world was coming into play. So all of it, let's go back, like if we go back to the late 90s, you can see a big change in how that chart moved around. It had a different...
I have another question within that.
Yeah.
So you're talking as well, and this is probably part of the manipulation part of it, is some of it there's physical, put in your hand, the gold and silver, but then there's also the stuff that's online. And I heard you say at one time that there's more being sold than there actually is.
Yes, it's a Ponzi scheme. Even what we've noticed, since the 90s, because of things like high frequency trading, they're able to put paper contracts on gold prices. So they can sell more gold than what has been mined if they wanted to. So they basically optimize the supply to be able to manipulate the prices. And in fact, today, as it stands, for every ounce of gold that has been brought up and on the market, for every ounce of gold that's on the market, 300 people think they own it because of those paper contracts.
So then it would be better to have it in your hand as a physical. Than,
Yeah, it's better from the perspective of it's liquid now. You can use that as a means of exchange in an instant. I can tell you right now that when this financial crisis is in full fledged, there will be very few farmers that will accept currency like the Canadian dollar,
Mhm.
especially if they're a small farm.
Right.
They can't do it. They can't do it. I'm already speaking with a pig farmer. Oh, Ray, we've been talking about this. He's like, I don't know how much longer I can accept Canadian dollar. I have to because I need to use the Canadian dollar. He said, but I don't think I can take them on deposit anymore because by the time the pig is ready for slaughter, the money that the customer has given me can't finish paying for the pig and all the feed and everything. So the deposit that he gets at the beginning of the year can't pay for the whole pig. So you can bet your boots it's only going to be a matter of time, I think within a year, that your local food supply, which is by the way who you ought to be supporting, don't support the grocery stores because that whole supply line has been compromised with mRNA technology. You want to buy from those permaculturalists, all those hippies, all the people that got laughed at for the last 2,400 years because they didn't want to, get government subsidies. Oh, the horror. They go and buy from them because that's how you get food sovereignty, supporting them. And I think that based on what I'm seeing, we've got about a year and they won't be taking orders without taking silver. Because like you were saying, Ian, this is the poor man's gold. It's the saying that I like. I got this from, where was this? I can't remember now. Gold is the currency of kings. Silver is the currency of merchants. And the dollar is the currency of slaves. Or fiat is the currency of slaves. So yes, silver is going to be a mainstay. I think in a relatively short order.
So when you get silver or even gold, it's make sure you have it physically in your hand, not just the paper contract.
I like that. I like that. I can't tell what people ought to do simply because, see, I spoke with someone towards the end of October, and they wanted to buy $1.6 million worth of metal, and they didn't want it all at home. They wanted it safe in a vault, right? So obviously use prudence and get to know the people that you're doing business with. That's all I got to say about that. As far as vaulting goes, there's actually a dealer, New World Precious Metals, and you can go to I don't remember their website, but if you go to whatsupcanada.org and you click on their precious metals link, you'll be taken to his referral link for New World Precious Metals. And that's all I've been doing. If people want to get metals and they're not from around here, I just tell them to go there because there you can place an order, they'll ship it to you. And he also does pickup. You can also do pickup, and they also have a vault. So the options are there. I prefer to have it in my hand.
Yeah, I would never buy
Or
paper gold or silver. There's
no.
too many fingers in the pot.
Yep.
Well, that's what I told Deb, right? Like, me and her family wants to buy silver. And I said, make sure you don't buy it on, because she was asking me about, the wallets and stuff. And I'm like, yeah, you don't want to buy gold and silver online.
Right.
You want to make sure you buy that and get it physically in your hand.
Have a relationship with whom you're doing business, and especially when you're doing that, because you want to have an option for an exit strategy as well.
Mhm. I'm going to
Right?
actually give her your number. Is that okay, Paul? That way she
Yeah,
can
of
call
course.
you. Okay.
Yeah. I think Deb's on the right track. She didn't know anything, and within that 45 minutes, she took notes.
You talked to
Yeah.
her already?
Yeah, this morning.
Oh, no way.
Just,
Okay.
just before us, yeah.
Oh yeah, Deb takes notes for sure. Yeah.
Yeah.
No, that was good. I'll call her
Yeah,
and find out how she liked it.
I have a relationship with the local, the Beck's Antiques
Yep.
is who our local. Actually, they have several stores in the area, and
He's
and the one
great.
in Rocky now,
And
Yep.
and you're local where, Ian?
Edmonton.
Oh, you are in Edmonton. I'm in Edmonton right now too. So okay.
Yeah, so they have one in Leduc, and he's the guy I deal with. They have the main one, the original one downtown, and there's another one I think on the east end of the city as well.
What are they
Yep.
called? Sorry, Ian.
Beck's,
Bex. Yeah.
Bex. BE.
Bravo Echo Charlie Kilo,
Okay.
Beck's Antiques, and whatever.
Okay.
He's also a member of BarterPay,
Okay.
but I don't think they would take barter credits for gold or silver.
No.
Uh,
No, but like I mean, even that, I don't know where you referred her to, Paul, but
oh, I just told her about the guy here in Rocky. Where does she live?
Edmonton.
Oh,
So
she's in it. Oh, well, I thought.
so
Why did I think she was closer to Drayton?
no,
Oh, because
Deb
she came
lives
to the
right
market.
in Edmonton, and she lives south side, so Leduc is fine.
Got it.
Yeah, Leduc,
Then,
Leduc is
yeah,
easy. Would be easier for her.
So what I'll
yeah, for
do
sure.
is I'll talk to her here right after, and I'll
Yeah,
just tell her about Beck's Antiques instead, and go in
yeah.
there and that, you know, if we mention your name, Ian, will they know who?
I don't think they know. They know my face, but not my name. I don't think
Oh, okay.
Okay. Yeah.
because any buying I've been doing there has not included my name.
Ah, okay.
I would imagine finding out where she lives that Jay will just simply, oh, call Leduc. But I'll text her. I'll text her. I'll let
Oh,
her
okay.
know.
Yeah, yeah. If you do that, that
Yeah,
would be great. Just say, hey, I didn't know you were in Edmonton. And here's
yeah,
a better place. Okay, cool.
yeah. And of course, what's nice about Bex, at least this has been my experience, no receipts.
Yep.
Ah, cool. Good, good.
Very. All right, let's go into the crypto markets. Actually, no, let's go look at US 30 because this is wavering here. We haven't seen this long of a consolidation for a while, especially within such a tight margin. Going to the daily chart, we can see that things are wild and crazy with gold going up higher. We have to update our number here. Remember, we've been tracking this for a while now.
Can you put the
Probably.
screen on large?
Oh, thank you. We've been tracking the rate of the market against the price of gold for a while. Since we know that gold and silver maintains its purchasing power, we know then that we can verify whether or not the markets are going up and down simply by taking the price of the US 30, which is the Dow Jones Industrial Average Index. We go 48,902 divided by the price of gold, which right now is 53.33. And the result today is 9.16. So the market's lost yet another tenth of an ounce of gold from Tuesday. Oh no, I did update that yesterday. So that's from 24 hours ago. So what do we have now? Well, this is a massive drop. In fact, from 1236, which what it was just earlier this year, April 2025, it was 1236. That is a 25% drop. But yet the markets tell us it's 34% up. And like I've been saying, and I'm going to repeat myself, until someone takes over and just interrupts me. This is a lie, as it is. This is already a lie. They've said that it's gone up 32%, when in fact, it has gone down in value by 25. So they're lying in the opposite direction 58%. That is since April 2025. We haven't even gone through a year, and the markets have dropped in value by 58%. What a lie. That's why. This is why it was already 2 years ago. I was learning to let go of the value of the dollar because it doesn't mean anything anymore. It doesn't mean anything anymore. This is the reset. It doesn't mean anything anymore. In fact, it doesn't mean much more than any other asset that we're looking at today. It's just another meme coin. Market cap. On this market cap dominance on Bitcoin, currently at 59.24%, dropping from this earlier this week where we were butting up against that 60% line, and we're creating yet another low. Remember how it was the other on Tuesday? I said with this low here, if we don't come up strong enough, I think we're going to go down. Yep, sure enough. Now we're below that long-term trend line. This is the dominance of Bitcoin. The reason why we're looking at this is because this helps us recognize where the flow of money is going. There's crypto, but Bitcoin and Ethereum were kind of the first two to go at it, so to speak. And in fact, Bitcoin really became the digital gold, while Ethereum became the digital silver in the respect that it's the big players that are going to be buying $83,000 coins. That's why. It just makes sense. It's going to be the kings that go toward the original. And then for Ethereum, this one is the merchant's coin. A lot of businesses can start up within the digital realm with this ecosystem. They can create smart contracts, which allow them to automate their finances. That's what we're headed into, is a realm where our financial infrastructure is getting an operating system. And the opportunity for the individual is to create their own. And Ethereum is a great access point or a gateway to that realm. I'm not going down that way. I like a little bit more privacy, a lot more privacy. Another coin that we watch out for is ADA. ADA is the primary coin that I like to go for when it comes to privacy, simply because of the aligned values that they have. This is not the be-all and end-all. This is a process. We have to build what we want. And what we do is that we use different tools that facilitate that process of learning how to operate ourselves financially outside of the crazy realm of manipulation. Now, of course, we see this particular asset has its own fluctuation, goes up and down all over the place. And that's just because it's on the market and it's worth whatever someone is willing to pay for it. Right now, we're seeing it very, very low within market structure. The last time it was this low was before the election. This was end of October. So this coming back down to find support at these low levels, this is a very, very good spot to be buying, simply because if it just comes back to where it was back in December of 2024, so last Christmas, not last Christmas, rather the Christmas before, just returning back to that level is, and this, this is what we've been chatting about in market analysis for quite some time, the 300%, just coming back to where it was in December. But that's nothing, because the coming back is going to be occurring as, everybody gets on board with the next wave of the digital ID onboarding platform. That takes us back to an all-time high of August 2021 when there was just a little bit of money coming in. When the first wave of digital IDs were starting to be issued. So the August 2021, it peaked out at $3.09. So where we are right now is 33 cents. So coming back, as we re-enter this phase of the Great Reset, where the next phase of digital onboarding occurs, as it stands right now, that's an 834% gain from today's price to the all-time high. That's just recovering. But that I have every expectation of it going further simply because there's a lot more. I have to really stress this somehow without making it sound really annoying. A lot more money is coming in this time than last time. Think about Zoom. Zoom was an overnight. It became a household name in 2020. It was being used before that. I was using the tool around 2018, 2019, testing it out. And it was a pretty basic tool back then. And then December 2019, stock price was $59. And it went up within that period of time, just from December 2019 to the peak of October 20. It went up 782%. And then what did it do? Well, it took about twice as long, but it came back down to an all-time low of $50. That's a huge drop. It went up 782%, only to turn around and lose 89% within 1,300 days. That all happened. And look, it has never really recovered yet. But that's what we saw happen to Zoom, 780%. You can bet your boots that the next time we go into the digital, this next phase of the onboarding for the digital ID, there's going to be a whole lot more money coming in this time. A lot. My target on ADA is $8. That's when I'm going to start selling. And I'm going to keep on selling for as long as it continues to go up. But I'm going to sell out portions of it. That's my exit strategy. Same thing with silver and gold, folks. Same thing with silver and gold. There has to be an exit strategy to this. If you've got silver, or if you're just now buying it, you have to have an exit strategy. Because this is just another rug pull. This is, yes, silver and gold is worth this much. Yes, it's a rare earth mineral, and we need it for a lot of things. But it's also, this price here, this is going to only go worse, where it's going to come back and it'll be worth nothing in the dollar anymore because nobody wants to trade it.
Nobody wants to trade silver?
For $1. Eventually, this will just flatline. Come right back, just like it did last time.
Well, it'll be measurable, but maybe not against the dollar.
Yeah. And so the exit strategy needs to be once, like for instance, if you have a local currency and it's called a dollar, let's say, and maybe that's what the exit strategy is all the people say, hey, why don't we make our own currency? But we can talk about that another time. But let's say, for instance, people continue to use that metaverse in-game currency known as the dollar, and they don't sell it at the right time. They don't have an exit strategy. They will experience the same kind of thing that occurred in the 80s, where it comes down and loses the value. It went all the way up. This was the most previous high before this last run here, $48 an ounce in 1980. And then it dropped all the way down and found a low. But the first low brought it down in just 2 years down to $4.79. So that drop, you don't want to be on that side of the mountain. You want to be like just after that peak. You know, if you're not so lucky, you might be able to capture this next peak here, which is which was 21. Very few people can time it right at the top. You got to know a lot. So my strategy is to look at how this went. This hockey stick, so to speak, started about here. This was May 79. This is where it went above the all-time previous high, was in 1974, $6.75. Well, when it got above that, it didn't take long for that hockey stick to form. But then you can see how much of a correction that was. And this, after it beat that all-time high, it only took 350 days for it to reach its peak. So this is going to be a very, like I'm saying, a year to 2 years on the outset is what we're going to be seeing. So you want to have an exit strategy so that you don't get caught looking for a buyer afterwards.
What is the likelihood that the peak in 1979 that you have there at the beginning of your little box is where we are right now?
I'm pretty certain that that's about where we are right now. If we look at that little, that in comparison to today, I don't even think we've even formed that yet, that little notch. I think we've only just begun. Or it might be this. It's just, that's really, really short time frame. But it might be shorter because we're down to these microtransactions today. We were not processing worldwide. We weren't processing 22,000 credit card transactions on Visa alone per second.
Now, back then it was chick, you know.
Yeah, exactly. And it still wasn't done.
Everything was paper.
The money still hadn't even come yet.
Yep.
Yep. So, that might be it. You're right, Ian. That there might be the very, very start.
October.
Yep.
Because
just a few months ago.
That is
back
the all-time. On that date, October 17th, that was the all-time high.
Yes. And that's 53% ago.
Yep.
Before that, 53%. What did it take 53% to do then before that? The last 53% took right there. Oh, not even. Still not even. There's 53%. The last time it took 53% to rise was 563 days. Wow. Exit strategy on silver. Let's go back to this exit strategy. Comes back to that first chart that one of the first charts we were looking at. The ratio between gold and silver. I'm feeling about talking about this because I feel like talking about this because earlier today I met with Diane and we chatted for about 45 minutes and I got into some basics, the foundations, and I felt it was important to review, especially going into this period of time. If you can get your hands on some silver, hang on tight because I think you'll probably 5x from here.
From where it is now?
In comparison to gold.
Okay.
Yeah, in comparison to gold. What that turns out to be on the dollar, who knows? It's anybody's game.
Now, what's the chance that it'll go back to a 70 to 80 to 1 ratio, which means that either silver will drop drastically or gold will skyrocket?
The likelihood's pretty small. They would have to renegotiate paper contracts and go back to manipulating again, but I don't think they can do that simply because of the shortages that they're going to have making all of these data centers.
Okay.
That's my take, is that what I just saw a headline on Unusual Whales on X I love getting their updates because they're nice, quick, easy, keeps me abreast of what I feel matters most. And there was one of the big financial firms was saying, we are doing everything we can to buy up as much silver that is on the market as possible. Physical silver. And I kind of feel it might be because, again, when we see people who are in executive positions for these corporations, they have to put on a specific show, right? Because the whole thing is just a reality TV show. So they have to put on a specific face when they're saying these things. And I think what they're doing is that they are simply saying, we've over leveraged ourselves on silver contracts, and we have to have some physical stuff here, or else we're not going to be able to fulfill on our obligations. So that's where I think that that's actually like what that's actually saying. I do believe that we will see this ratio. I think we'll see this bounce around. I'm gonna go down here because we've you know what? And now because we're not going up, we're going down. I'm gonna change it to a regular chart, and that way I can just do this. I think what we're going to see. Can I do it like this? There we go. I'm gonna mark 10. Where's my other horizontal line table is down there. Okay, so here's 10. I think that the price of silver, the ratio, because again, that's where I'm going to be adjusting my sell strategy. My exit strategy is going to be revolving around this. I want to actually buy gold with my silver. That's my exit strategy on silver. And it's going to be the full exit strategy is 2 phases. The first of which is getting gold. So silver, I think, is going to careen its way, maybe a couple of bounces, but it's going to careen its way to 10, maybe even into like 8. But then it's going to equalize like this back out to, the average. So my exit strategy is once we are down to like 15, I'm going to start calling up my gold dealer, my bullion dealer, and I'm going to say, hey, how many ounces of silver, or how many ounces of silver would you accept for an ounce of gold? And because I have a good relationship with him that I've fostered, well, I've got 3 people that I've got a good relationship with over the past 17 years. And depending on what I want to do and how fast I want to do it, I'll be giving them all a call and just seeing what I can accomplish. But that I will be exchanging my silver for gold once we're in this range here. Then, that gold I'm going to keep. Why? Because when gold does this kind of thing, we're going to go to the weekly chart to zoom out. When gold does this kind of thing, what happens afterwards? Well, last time, interest rates went up just a little bit when it dropped when this rise happened after the 2008 crash. Interest rates went up a little bit, but that again, that went back down to previous lows, and that was just again, it's another onboarding. There was another transition that occurred during this here that set the stage for the great global currency reset. We call it GCR. That's all what the 2013, 14, 15, 16, that's where those investments were being made to set the foundation for 2020. But that before that, this rise here should have triggered a massive increase in interest rates. It didn't. The manipulation had to go on. I think that this period of time, right after the dollar got depegged from the gold, that this hockey stick here that brought it up to $877, that it was that that was like their test. Hey, what can we do now that we can manipulate the markets? How do we take this to our benefit? And they were able to then interest rates. I remember being like 5, 6 years old and hearing about how grateful my grandparents were that interest rates had dropped to 19%.
Yeah, in the early '90s, I was selling GICs for over 10%.
Yeah. Yeah.
I
Yeah.
think you can't get 1% now. I don't know what that is, but
That's right. I know it doesn't keep up with inflation. So when gold does this, typically speaking, and this happens across other currencies as well, whenever we've seen this kind of thing happen, Venezuela had the same thing happen when they had 300,000% inflation. You could go downtown and get a city block of commercial real estate, fully developed, for 5 ounces of gold. You could buy a house with 1 ounce of gold because the inflation was just so terrible. And
how do
because the
you?
inflation, oh, go ahead.
No, I'm sorry. Finish what you're saying.
What I was going to say, when that happens, nations have high interest rates because they have to attract investors, and they're the seediest investors you can possibly imagine. But that's what they have to do to maintain their regimes. So when the interest rates go up on real estate, that's when prices of real estate drop because nobody can afford that. And so I will be taking my gold and wait it up and hold on to that like I did with my silver. And with the gold, I'll be getting land because real estate will drop. And I'll be able to go to someone who's upside down on a section of land somewhere and be like, here, I'll give you some gold. And he'll be like, oh, thank you so much for this. How much did I buy that for? I bought my dollar cost average throughout this period of time was great. I want to say that I probably averaged around $1,500 an ounce. Right. So when I go and buy that, say I get a section of land for 4 ounces, 5 ounces, I can say I got a section of land for about $9,000.
What has your analysis, your ability to analyze, how has that changed since when you started buying gold back in 2012? Like when you bought when it was high, and then
Oh,
of course it dropped, and you kind of shook your head, and
you know what? That I feel so terrible, embarrassed to say this. I didn't even know what dollar cost average meant until 2018.
okay,
When when I was told, like it was like in here, when I was told what dollar cost averaging was, I had already been doing it, but I was doing it completely, like literally out of terror that I was going to miss out,
sure.
that I was going to be a colossal failure. So I didn't really know a whole lot about what I was doing. I just knew I had to get gold and silver. And it was here in 2017 when I started trading on Forex. And that was where, school of hard knocks. I took $23,000, turned it into $50,000 in 1 month, and then I lost $49,000 the next. And that was a lesson in itself. I call that my tuition. Because after that, that's when I was like, okay, I got to learn this stuff. And in 2018 is when I found out about DCAing. And I was so grateful that I had done that up to that point. But I was like, that is a long-term strategy. You can do it in the short term, but you have to approach it totally differently. Your money management is radically different once you go under a daily chart. So dollar cost averaging is what you do on a daily chart because the fluctuations give you time to move $5,000, $10,000, or you might be like, you know what, I'm going to wait $5 more, and then I'll get some because that's my limit. That's where my strategy starts. But that, yeah, I would say 2018, 19, and 20 when I was trading, traded for a year scalping paper contracts. So no, just play money. You know that you can go to any one of the brokers and they'll give you an account and you can go and play with free money and you're playing live markets. So I did that for a year. Then I put real money in, and that's when I started to really apply what I was learning, and the emotionality changed everything. And I didn't succeed for 6 months probably. Even though I had a track record with the real money, as soon as there was real money involved, it messed up with my emotions. And that's when I had a losing streak. I
Have you ever
got
put
myself.
down on?
I just was gonna say learned how to regulate my emotions through that. I remember one trade I made $2,600 with $60, and I was on top of the world and feeling like, oh yeah, I'm invincible now. And then a week would go by, and I would risk another $60 and end up over leveraged and lose the $2,400 I made the week before. And I remember like just sweat falling onto my desk, and I was mopping sweat because I didn't regulate, I couldn't regulate that emotion. So, and that was the final piece that allowed me to start seeing success from the principles. And I'll let you talk now.
What do you see in terms of the price of gold and silver relative to real estate? You think it is? You've already indicated that you think real estate's going to drop, likely because of the interest rates are going to jump. But when I look back in 1972, just after Nixon took the dollar off the gold standard, my parents bought 15 acres outside of Vernon, BC, up on kind of a hillside for I think it was $8,000,
Wow.
15 acres.
Yeah.
A year or 2 years later, my dad sold half of that for $15,000.
Oh.
A year after that, that family sold that for $32,000. So in 2 years, 3 years, it went from, what would that have been, about $800 an acre? Oh, no, I think dad and mom bought the 15 for $12,000. That's what it was.
Okay. Yeah.
$12,000. Yeah.
Wow.
And so that's $800 an acre. That's what it was. So in 3 years, it went from $800 an acre to $7,000 an acre. No, that's not right. Yeah, it is right.
Yeah, that sounds right.
Yeah.
Yeah.
Yeah. Now,
Yeah.
in the interim, my parents built a house on that property, and that's where I lived out the latter years of my teen years. But real estate, after that de-dollarized or de-golding the dollar, like just went, it hockey sticked.
Mm-hmm.
And so when I look at a gold chart that far back, the gold didn't. Yes, the price of gold went up, to a high point. It went up 300% in 3 years.
Mm-hmm.
But real estate went up many more times than that. Like going from $800 an acre to That's 800%
Yeah. So
versus 300.
800% gold. It took gold 800%. It took gold 2,500 days to do that.
Yeah.
Yeah,
So
and this is that the reason why there was such a big boom there was because they could do it. They could flood the market with currency now because it was backed by oil future contracts.
now after that point, it kind of plateaued real estate. I mean,
Yeah.
it didn't. If you developed the real estate and put a house on it and stuff like that, it did increase in value. But I think back in by 1980, my parents sold that property, including a house, for about $151,000.
Mhm.
Um, and by then, gold had increased. Yeah, 1,000% from 1972.
Yep.
Anyhow, so I'm just trying to think about what is the. I mean, obviously the timeline shortened in our current market because of the digitization of everything and
Yeah.
the way the markets operate now. Everything done on microseconds as opposed to minutes. And
Yep. It's interesting. We take a look at that 1,200% from the low of 1972. We call that the transfer. I call the low of 2020, the Biden era. I call that low the most previous low, similar to that 1972 moment, but up 1,200%. That takes us to a $13,000 ounce of gold.
huh,
That's if you don't have inflation on top of it during the same time, which is exactly what we're going through. The inflation rate that we're at right now is actually very similar to what Germany experienced in around 33 to 36, where it just went crazy. And it reached to that boiling point later on where it was a wheelbarrow of currency to go get a loaf of bread. I think it was like 10 billion marks to get an ounce of gold.
see,
And
I
since
think
it's
I think it's going to come if we get off the dollar, then we'll be looking at the value of gold and silver relative to the things that we value, like
yes,
land, a loaf of bread, um,
yep,
a cow, that type of thing. Which
yep,
I mean, which is crazy. It takes us back several hundred years back to
mhm,
when that's how people view things.
yep, yep. That's exactly right. We are going to be we are going to be changing our perception of value considerably. I mean, look at how corporations are doing it right now. How corporations right now are changing the way they value everything. In fact, they're saying they're saying we don't think you're worth time anymore. Employers are saying to their employees, how much data, quality data can I use?
Yep.
That's what they're asking. So now you aren't worth hours per dollar per hours to them. You're dollars per terabyte.
Yep. Is there a chart like this? I mean, I see it's obvious that you made this chart. You inserted the values, etc. They
Oh,
don't have
yeah,
a
yeah.
chart out there anywhere comparing the Dow Jones to gold.
There probably is. Let me go see. You know what? They might actually have one for the SP 500 more so. Gold ratio. Let's go see. Yeah, Macro Trends has it,
Okay, but not on TradingView.
not on TradingView, no.
Okay.
Yeah, but I mean, when it falls pretty harshly. And we definitely hit this resistance at 2.5 ounces. And that is a long term, right?
Oh yeah.
Here's 1950, right? So let's
Where's
go
the
just the last
beginning?
10 years. Here's the last 10 years. Go
Okay.
20? Yeah, let's go 20 years. So after the recession, there was a low of 0.67 ounces.
Uh, can I just make a little comment?
Yeah, yeah.
What, like, well, earlier Audrey mentioned, well, there's manipulation. Yeah, and it's all
Hmm.
manipulation. And Ian just said here, what's a value? Like a cow, a loaf of bread, a piece of land, and then, but anyway, the macro of it is all financial and whatnot over the last 100 years.
Hmm. Yep. Well,
But but
this lends to the.
this technology that's happening and this AI, or the way I'm seeing it at the moment, uh, well, Ian said it, just, it's going to happen a lot faster than when you look at these trends back in the 70s and the 80s. Uh, well, gold and silver measured to the US dollar, but and then the way land increased. Uh, yeah, it's just going to, like, if some corporation wanted to build a power plant right now, there's you're waiting 5 years to buy a turbine. Uh, like the power infrastructure, the grid system they got to put in for this AI. Like I've heard these fast food joints, but it's all to do with data, are going to take 4 times the power to use because of the AI. Oh, I heard some other, but it's this data value that they're all using as equity in creating in the macro and doing the psychic on our minds. Uh, yeah, that's all I got to say. It's going to happen exponentially.
Yeah, I
Where
agree.
will it be the peak in the fall? I don't know.
Yeah, and
Or
it's
what am I seeing things correctly or not?
yeah, you are. Yeah, absolutely, absolutely. When I'm asked, how when are you getting out? I can't say when. I don't know how. I don't know the date that these events are going to occur. And I don't measure time with months and weeks and years anymore, really. I mean, yeah, we've got an appointment next week type thing. But uh, when it comes to finances, when it comes to this movement that we're in, it's going to be so tumultuous, volatility wise, that there's no way I can know where my exit point is on the dollar sign because I need to see events as markers, not dates or dollar amounts. Does that make sense?
Yeah.
And yeah,
Can you repeat it again?
yeah, sure, sure. Or Ian, do you have a way that you would like to explain it that it lands for you?
Well, you know what Gary was just saying about the power. I was saying when the NDP got rid of coal here in Alberta, I began to realize that what's replacing coal is not solar or wind, but gas. And so all of a sudden we went from eliminating a source of power to now creating a higher demand on an existing source of power. And I began saying that within 10 to 15 years we're going to triple the cost the bills of our electricity and gas. We're going to see those triple. And we've already seen quite a ballooning of them in the last 6, 7 years. Um, Gary, you mentioned the power thing. I'm involved with an organization that is creating these small generation plants where you can have one on your acreage and sell the excess power to the grid, which is an incredible thing because you have an opportunity to. They are 90% efficient compared to these major power plants, which are only 60% efficient in terms of the consumption of natural gas. So our power plants are 90% efficient on the natural gas they consume. So which in terms of the production of electricity is quite significant. I think that's going to add to the value of real estate that has one of these miniature power plants on it. It's just a logistical thing. I think there are so many factors, and this is one of the things I love being on these calls, Paul, is because you have an approach to analysis that I've not heard from other people. Which is wonderful.
Thank
But
you.
I do see real estate being, they're not making any more of it. Let's put it that way.
Yep. Nope. And if you're not making money with it, it's taking money out of your pocket.
Sure. Yeah, you got to be working the land. I mean, for a quarter section, there is so much that could be done with a quarter section of land.
Yep.
It's crazy. The food production, in terms of vegetables, livestock, chickens, there is
Yep.
so much that can be done. Crazy.
Yep. Yep. Yeah, great. Thank you. It's going to be tumultuous, and I'm of the mind that I believe what we're going to see happen is the same thing that we've seen happen in the past, which is most people will likely follow the main narrative, and they will get emotional and reactionary, and because that's what the masses do. And the only people that benefit from all of this are those that control the narrative over the masses. We get to ride these waves. That's what I've always recognized. Yep, markets are manipulated. They're just going to get manipulated. That's just the way it is. But if you recognize the patterns of how they bring their manipulation into being, how is it that it shows up in their patterns, in their displayed, in the displayed math that we have, it can be very, very profitable because you're just hedging yourself. It's no different than hedging a bet. It's like, I think they're going to do this. And sure enough, they are. If they don't, just in case, I got this asset over here because maybe we'll win. And if we do, we're even in better position because money's not going to matter so much anymore. The only reason we talk about it so much is because it consumes most of our daily lives. And I call that love, which we know what that leads to. Don't love money, duh, right? But we've been entrained to do so. Think about it. The people that are working day to day, they're stressed out about money. They get home and they think they're done making money, but they're at home not connecting with their family because they're worried about making money next day, or is it going to be enough for the first type thing. That, to me, is the root of evil, is to have a life where that is all consuming. The world as it is, the masses follow that. And we, as a people who are looking at that entire playground from this perspective, the perspective is different, Ian. You're absolutely right. Because I refuse to look at it the way that it's talked about in the narrative. The way that it's talked about in the narrative is typically always being brought forward to invoke an emotion, not to give us the news, not to tell us what happened. They want to tell us the definition of what happened. Audrey, you heading out? Okay. Make sure, like, if you, oh, she's gone. I was just going to get her, remind her about the co-work if she needed more help. Okay. Yeah, we are at a very, very transitional time. Everything is changing, and we need to safeguard our minds from the what do they call that? Well, it's fear mongering. Not really. It's more like just emotion mongering.
I love this chart.
Yeah, me too. You really see it, don't
It really,
So-
it really says a lot.
Yeah, it does. Look at this one. I like this one. C right here, 1236. But when COVID crashed, it was 1253. So
Yeah.
even from the very worst part of COVID, they say it's up 100%. Nope. It's the
Flat.
same.
Crazy.
Yeah.
Now, what if you added silver in there? Like,
Yeah.
what if you kind of added a smaller aspect to that where you got silver above the gold?
Yeah, that's easy enough to do. Just I would go to every point in time, right? It's a bit lengthy. I think it took me about an hour to do all the math and make sure
Sure.
that I was getting a good perspective on it because I wanted to get the highs and lows at those times. And because then it's like the extremes, right?
It'd be nice to do it algorithmically where it changes on the current one,
Yes. Yeah. Yeah. But we can do it easily enough by taking 48,000 calculator here. 48,940 divided by silver 112 56. So it's 434.79.
Okay.
Let's go and just quickly see what it was since here. So this was April 2025, where it was 48. No, that was 36 rather, 36,704. Divide that by, and that was April 7th lows. So we go to April 7th silver. April 7th. 2863. 1,282 ounces.
Wow, eh?
Wow.
What a difference. So according to silver, the market has dropped 60%.
Yep.
Approximately
Yep.
65, maybe.
It is 33.9% of what it was.
Yeah, so it's dropped
So-
2/3.
Yeah, 66.
Wow. Man, I love that chart.
Yeah, I know.
Okay, give me your next one and I'll tell you what the price was on silver.
Oh, okay. Okay. Yeah. Silver. So the highs of B, the highs were
What date?
December 2024, December 3rd, 2024 was 50 45 6 45063.
I
What do you
got
got for
30.94.
wow. Come on. Ugh, fine. I'll do it this way. 1456.
Wow.
So even with that drop, still got cheaper to buy it. Amazing. You know what? I'm realizing because I want to see these here stay here. I'm going to change the. Oh, that's the line. I'm going to change the font color just so that it's a lot
Sure.
easier to identify between the two.
Turn the AU into yellow. Yeah.
Yep, yep, yep. Oh, that's not the right yellow. There you go.
And that compared to a year ago, let's see here.
All right. So, do you want to do another one? Let's do the Biden era. The low was September. Nope, sorry, October 3rd.
What
Let's
year?
just narrow. This was 2022, October 3rd, 2022.
22?
Yep.
Okay. I'm on the daily chart. You're on the weekly. Oh, you're on the daily. Okay. Oh, I see. Yep. Actually, that's August 31st. September 1st is the
Oh,
low.
that was the low on silver.
Okay.
Oh, oh, I see. There's two. Yeah,
Oh, I
there's
see.
two.
Okay. Yep. Tell me.
I went, I went to the lower low on the 3rd.
Okay. 3rd of October. Very good. $20.67.
Okay, so there we actually had almost a straight line because this ended up being. Come on. Oh, don't.
Taking half as much silver now to buy the same amount of gold.
Yep. Okay. Copy, paste. And let's go down here. This
You can
was
put it below.
1391. Oh,
Oh, wow.
1392 rounded up. So it. What happened there? Come on. Oh, there we go. 1392. So it actually did get more expensive to get it during that time. But I mean, silver also was, there was a lot of flatlining still with silver,
Yep.
right? Because silver stayed well below that. It didn't even reach an all-time, it didn't even push up against old highs until May 2024, and it didn't even reach the 1980 high, previous high of 48 until October. So
Hmm.
silver was delayed in its big rush. I remember there was I went and got into contact with one of my friends from when we did business back in like 2019, and it was like 14. I think he even got like $13 from someone once or something like that. He actually bought a, a monster box, which is what is a monster box? I think it's 15 tubes. So he got mass like it was he dumped like $15,000 and got probably 1,000 ounces
Of silver.
of silver at that time. And I chatted with him when it was, in the Biden era, 2022, at these lows here. I chatted with him during this time, and he was complaining about buying when he had to go buy silver, and he was just complaining because I remember getting silver at such good prices before. Now it's like $25 an ounce.
Yeah, I had a friend many years ago bought about. He spent $32,000 bought,
Yeah.
and I think it was 30,000. I think 32 an ounce,
Yep.
and of course, so then it dropped quite significantly into the
Yeah.
teens.
Yep.
Well,
Yep.
he's smiling now,
Oh yeah.
but he bought only bars. He didn't buy any rounds.
Okay. Yep.
So do you want to do one more, or do you want to fill up that chart?
Yeah. Do you want to go all the way back? Sure.
Oh yeah.
The next one that I have, well, this is weird. Oh, we didn't do. Okay, yeah, that's right. Here's the next high. The next high that we have that market structure was January 3rd, 2022, and that high 36,955. January 3rd.
Oh, okay, you're looking at about 22.96.
That was 1610.
Wow, eh?
All right, COVID. The jump in 23rd of March was the low.
23rd of March.
Oh, sorry, I went to the daily chart. Let me get right in on that. That was actually oh yeah, nope, 23rd of March. 23rd of March on the day.
$12.89.
1546. And then the high right before that, the
Sorry,
all-time
sorry, that was 13.24 is what it finished out
1324.
the day that day. 13.24.
Okay, 1505. Okay, and then next, let's go there and change the color of this one to yellow. All right, so the next one was the high was the 12th of February 2020.
17.49.
Come on. $16.92. The previous highs started.
Where's
We
your,
buttoned up.
where's your 16? Oh, there it is. Okay.
Yep. Then the next one, this high. I don't really know the best way to do this. This to me is what I call the high because it just butted up against that before it took off to the accumulation. But by rights, we should probably measure this one because it was the highest point there. Well, I don't know.
I'd
Let's
stay
take the
with
middle.
that because it was the first high after the.
Yeah. Okay.
Yeah.
First high. Yeah. That
What's the date?
was. Yeah. In there. That was the 29th of January, 2018.
Twenty-ninth of January. Okay, that day finished at 1714, 17.14.
Me and my fat thumbs. Okay, there we go. Oh, let's grab the copy paste ordeal. $15.58. Yep, amazing. And then the last one that I had before that was May 2015. This was the high after 2011. That high was May 20th, 2015.
One 7.07.
17.07. Only 1,074. Wow.
Crazy, eh?
This was a big jump. Where that actually did go up 30
Everything
some
went up.
percent. Yep, everything went up during that time. But now we sit at 434.
When did it started going down back? Oh, 1692 was the high in silver.
1692. Yep, yep,
And it's been going down ever since.
yep.
Yeah, so it's about a 2/3 drop. A little less.
Yes. Okay, so that means 2/3 drop in silver. Yep. And look at that, two-thirds increase. It's upside down. It's literally upside
crazy.
down.
Wow.
Wow, indeed. I'm glad you pushed through the getting me to go through all the way through that. Amazing.
It is. It is. It really is. Well, I've got to run.
All right. Well, have a good rest of the day, and
Yeah, you
I'll be
too,
in
man.
I'll be in co-work there till about 2:30, so you're more than welcome to stop by anytime.
Okay. I may be back.
Just a quick note. I met with Alex, or sorry, Alan Knox, senior executive in software tech, and he gave me a consultation on LLMs. Or did I share that with you already? I think no.
You did, but we didn't get into the depth of it. You
Oh,
just said that you're going to be using them.
I've already been implementing. I took his transcript and I gave it to my LLM and I said, "Take notes." I'm looking forward to
What
sharing.
is the key difference? Like, what did you learn from him?
The big thing was that, you know what, I wasn't focusing on the wrong thing. However, he said there's something more important that you need to have as a foundation. And he gave me a prompt. And for some reason, my thing isn't working here. My chalkboard's not moving around. I got to use my keyboard here for a second. And he said that what you want is a decision tree where, what the heck? Now this thing is stuck. Now my mouse is stuck. But yeah, he said the decision tree is the big thing. You want to have it where you can go back and review the decisions that you've made. This is still, something is broken on my mouse right now. I got to reset my computer, I think. You need to have a list of decisions that you've made so that you can go back and see what caused the current circumstance.
Sure.
If you have that, then it's easy enough to change direction and pivot and move when you're going through things because you can trace back how you got to where you are. And that gives the LLMs the structure it needs to properly move a project forward. If you don't have that, you're going to come up against times where you're making an update and it will not have that tree of decisions
Yep.
and the reasons why those decisions were made, and it will implement something that is out of integrity with those old decisions.
Oh, wow.
So
That's great.
so he said, get that foundation. He said, I showed him all my different prompts and stuff, and I thought he'd be like, oh wow, you're really far along. No, he was humbling. He said, this is great, but you're missing the most important piece.
Does that mean that you could actually go back to a past decision, change it, and that would change everything? Bingo.
Yep. Bingo.
So you could actually trace back a mistake or
Yep.
an adjustment to be made, and it would affect everything.
You can go back in time.
So how do you determine what a decision is?
That's a good question. So what I've done, the prompt that he told me to take is, oh, and now my mouse is deciding to work a little bit. Let's see if this will work. Yeah, okay. So the prompt that he had me, oh, I'm still not, oh, there we go. So the prompt that he had me goes along the lines of, when working together, the moment that you recognize that I am going to have to make a decision on anything, branch out the decisions that I'm going to have to make and give me the options that are available to me
Oh, wow.
so that I can review them and choose now so that when we're building, you already know what I want. And what the idea that I have, like, ask me questions like, hey, Grok, if you need clarity on anything, ask me the questions that I can answer so that you've got the context to help me optimize the result. That, he said, great start. But now tell it to ask you the questions that will help you make better decisions.
So ask it to give you the questions that need to be asked
Yep.
for the decisions.
And how to think about making those decisions. Because there are things that I've already come up against since yesterday where I'm like, I don't know what to decide.
So it's almost
don't
like a table of contents.
Yeah.
You know,
big-
here's your book, and then here's the chapters, but then here's the subheadings in the chapter, and you
Yep.
could even go down to each sentence and say give one word for each sentence. Okay,
Yep.
cool.
Yep. I'm looking forward to seeing what else comes out of this.
Well, I would love to. So, how do you incorporate that into a prompt?
So what I have now, like I have a pretty sizable infrastructure already built for Man Known as Paul.
Yeah.
So my next phase is I'm going to take this infrastructure, I'm going to give it to Claude Code. And that's another thing too I got to talk about eventually with you, but that GML7 that I talked about, GLM7 or
Yeah.
4.7 that
Yeah.
the open source model that's competing with Claude Code,
Yeah.
it's incredible how much cheaper it is. I was
wow.
amazed. I
Wow.
will use Claude Code because of its deep reasoning and because of its capacities for coding. I'm taking the entire code base of what I have and I'm going to give it to another session, but inside that session I'm going to say I need to build a decision tree.
Mm.
And this is my infrastructure. Map out the decisions I'm going to have to make, and teach me about the options that are available.
Cool.
Yeah.
Well, I'm still, I'm still taking baby steps here, brother. So,
Oh yeah, of course. Me too.
I mean,
in our own way.
You are well into your adult years compared to me.
Well,
I'm, you have a mental capacity to let things where things fall into place. There's already places for them in your mind. I don't have that yet. I don't have a. You can show me a car. It's like the individual says, "Well, here's a car, steering wheel, gas pedal, brake." Okay, and the guy says, "Oh, wonderful!" He gets in, drives it, has no idea how it does what it does.
right.
No idea what's under the hood. No idea how that thing under the hood works. I mean, no idea. Okay, so
Yeah.
I'm looking at this thing and I see the steering wheel, the gas, and the brake pedal. That's all I see. You've already gotten the motor apart. And
Man, I don't even know about that. I opened up the hood.
Yeah, well, no, you're
Oh,
way
look.
beyond that.
It has one of those things. I guess I
Yeah,
can
yeah.
go this fast.
Anyhow, well,
Awesome.
wonderful. Okay,
Yeah,
you have a great day, and we'll talk
Yeah, well,
soon.
Indeed.
If not today, tomorrow morning.